Hey traders, welcome back. Today is Sunday evening, May the 22nd, 2022. We're getting ready for another trading week in the trading room. This is our weekly trading preview. Gives you a little overview of what we're looking at to trade for the week. It's a pretty standard, straightforward week for us. This week we don't have a lot of twists and turns. Sometimes we do, and it shakes up our adjustments and trades a little bit. But this is a pretty straightforward week. Let's take a look at where we're at from a bullish, bearish, or neutral standpoint from a technical view. This is a little bit bigger view. This is a 30,000 foot view, if you will. These are weekly periods that I am looking at from a technical standpoint. In the trading room on a daily basis, we do look at daily technical numbers. So these would be weekly periods that we are looking at. And on the weekly periods, we are still or I should say now, because of Friday's being able to hold, we'll talk about that trading session in just a second, but we are still able to hold that 200-day moving average, again, on the weekly period, which is so critical. It really is the last bastion of support for this marketplace, but nevertheless, the trend continues to be a strong sell indicator, and the overall market is in a very bearish trend. We look at key support areas. I do generally like to look at the E-minis on that, and it's interesting where we're at right now. You know, with finishing the week the way that we did, we have now had 7 weeks in a row of a downturn in the marketplace, and if we go into this week, this coming week here, which, you know, again, there's probably just as good a shot as anything that we finish down again this week. There's only 3 times in the history of the stock market: 2001, 1980, and 1970, that those events have happened, and that's when we've been down 7 weeks. So again, this is only the 4th time in history that we've been down 7 weeks in a row. 2 of those previous 3 times, 2001, 1980, and 1970, in 2 of those 3 instances, we continued to go down and finish down 8 weeks in a row. That would be a record if we did that this week. If we finish down this week, it would be a record. It doesn't mean from a probability standpoint that, my goodness, we have to bounce here, but it does look like the market is wanting to find a bounce here. Nevertheless, the bulls are still on the run. The bears are still in charge. And even though the bulls gave it a good show on Friday, it was a very interesting session. If you looked at Friday's action, and you just looked at the close, it didn't look like much happened that day, but it was a big reversal day. Friday, we ended on another big daily bullish hammer candle, which is a big bullish signal, but that was the same exact setup that we had on May 2nd. What took place this past Friday, very reminiscent of what happened on May 2nd. Big bullish hammer at the end of the day. We had a shoot up over the next probably 3 days, I believe, of 250 points. We had a 250 point upward squeeze, short squeeze on the E-minis over a 3-day period of time, and then we melted right back down once again. So all things being considered, we are still in a bear market. The trend is clearly down here. But we are seeing some signs of life from the bulls, and so it will be interesting to see. As I look right now tonight, Sunday evening, we have already put on a trade in our official trade book for our live trading room just about 2 hours ago, with an overnight 1 DTE trade on the E-minis, more of a bullish trade, and that's already showing profits right now. We are up 41 points, right now on the E-minis. But my levels that I am looking at to start this week, okay, support levels. There's 3 critical support levels that I am looking at. 38.90, 38.50. I can write these down right here. 38.90, 38.50. And then last but not least, 38.10. 38.10. That would be the support levels that I'm looking at here in the marketplace. The resistance levels, there's quite a few that I'm looking at, starting at 39.30. Now we're past that right now. We're at 39.39. right now as we speak, up 40 points. So that's going to be the first thing tomorrow that's critical, is to see if we can hold that 39.30 level. Next up is 39.60. Above 39.60, I've got 39.85. Above 39.85, we go to 4,000. That's a big one. And then above 4,000, ultimately it would be 40.35. So those are levels. If we can break, the first question again is, can we hold above 39.30, which is where we're at right now? That would be the first good step forward for the bulls, if they could do that. If we break back down below 38.90, which we're a little bit a ways from that right now, that would put me back into a bearish stance for tomorrow. So lots of levels to play with here, but we'll see how that pans out going forward. Monthly sector rotation, obviously this only changes month to month, but everything is looking pretty ugly right now. There's a couple of areas, consumer staples and consumer discretionary. They both have been beaten up quite badly. Take a look. We can take a look at them right now, for example. VCR is the Vanguard index fund for consumer discretionary. You can see that that's absolutely just been taken out to the woodshed here, as retailers have really had some ugly numbers coming out as of late. I do believe that this is getting into the oversold territory, and I would put that on my watch list. The other one with consumers is XLP. XLP is the consumer staples, and that is at what I believe is a very nice support level, an area that I would be interested in starting to dip into a little bit here. We take a look at the heat map for the week-over-week period here, and you can see not a whole lot of complexity change in terms of where the market dynamics were. Still a lot of weakness in technology this week, a lot of weakness in those consumer areas of the marketplace, consumer defensive things like retailers, Walmart, Costco, Target, all really getting beat up. A little bit of strength coming in the healthcare sector and the energy sector, as well as basic materials, holding its own quite well. So again, those are areas to keep an eye on, at least for me, going into this week's trading session. But again, kind of a mixed bag this week overall, considering what the market did. The market absolutely just, again, got beat up. This is 2 weeks ago. This would be our last week's result right here. And you can see, if you just take a look, for example, take a look at the NASDAQ. I mean, it's quite something to see a market down 7% in a 2-week period of time. And doing it pretty methodically, not really, any panic coming into the marketplace. We'll look at the fear index in just a second, but it's absolutely been obviously a bad time to be long this market, a bad time to be an investor in this market, unless you're in our AST program, which has done pretty good. We'll look at the put-call ratio. Again, basically, when the put-call ratio is above 1, when the put volume is greater than the call volume, and it's below 1 when the call volume is bigger. So it's a sentiment gauge, and if we see the put-call ratio above 1, again, you know that puts are in play, and it's deemed to be somewhat of a bearish stance in the marketplace. If we look at a week-over-week stance here, you can see where we were at 2 weeks ago, and this is where we finished last week at. So we are bumping up a little bit. You're getting a little bit more bearish stance in the marketplace, and that's reflected obviously in the open interest in the SPX. You can see that we still are absolutely just being dominated by the put action versus the call action. Put activity is in some cases 2 to 1, some cases 10 to 15 to 1. 15 times more activity on certain strike prices than calls. So you know where the activity is in the marketplace. You know where the skew is. That also lets you know a little bit where the value is if you are an option seller. It almost relegates you to looking to opportunities on the put side because frankly, that's where the money at. But once again, that 4,000 level, we're at about 3,900. When I put this together, we're at 3,939 right now, pushing back up again. But that 4,000 level is just, again, a huge gamma wall. 3,900 as well is a big one. But again, most all of the activity is on the put side. And you can see that a lot of these areas do coincide quite nicely with some of my support resistance areas. So we'll have to see how that flows going forward here. Expected move for the week, kind of interesting. Last week's expected move was 133 points. We moved way more than that. This week's expected move is actually down. Volatility has, surprising, I know it doesn't feel like that should be the case, but we actually have lower volatility going into this next trading week here. Still great, you know. I mean, we've seen this number down at 45 last year when we were trading, and so it's not surprising that we can and are getting 2 times, sometimes 3 times, 300% more premium today than we got last year with our 0 DTEs. We look at a heat map of the marketplace, and you can see that even though the trend has been decidedly down, it does look like we're trying to find some support down in here, and it does look like our indicators are all sort of moving towards more of a neutral stance. They're not anymore implying that we are necessarily oversold, but they are moving more towards a neutral stance. So it'll be interesting to see with the futures up now, again, 40 points. Our indicators turning a little bit more neutral. The market trying to find some support here once again where we go for this week. We do look at the fear greed indicator. It is a sentiment reading. It really just tells us kind of what people are thinking in terms of their sentiment in the marketplace. And it's a contrarian indicator. We look at all kinds of things, the stock price momentum of the S&P, stock strength. We look at breadth. So we're looking at breadth, depth, and volume in terms of what the option is doing, put-call ratios, junk bond demand. A lot of times that can be a haven for money. Money is usually either flowing between stocks and bonds, but not going into both places simultaneously. Market volatility, we do look at the VIX, and that's an interesting one to take a look at here, and as well as safe haven demand. How money is flowing into treasuries or out of treasuries. And that's the challenge I think that a lot of traders face right now with the Fed raising interest rates and pulling their easing off the table. It's not necessarily the safe haven that a lot of people think it once was, or that it was at one time. But anyway, the fear and greed index, it is a contrarian indicator. When we get up here to these levels of extreme greed, that's probably a good time to start shorting the market. And when we get down here, you know, maybe below 20, that's a good time to start buying the market. Well, we're in that extreme fear range. We actually were able to push even a little bit lower this last week than the previous week. Previous week, we were down at a 12. This week we're down at 11. So the fear greed sentiment reading is implying that we're getting closer and closer to a bottom. That's not always a totally accurate prediction. What is a little baffling, I will say, in all of this is the VIX itself. Sure, you could go back just a little ways in time, and the VIX was $14 a share. And it was pushing almost 40 up in here. So it certainly has moved, but it's pretty much just been range bound. Now, granted, it is an expanded range, but you're not seeing the fear in the VIX index in terms of just the market absolutely collapsing. That doesn't necessarily bode well if you're looking for capitulation in the marketplace before we start back up. But we'll see how it develops again this week as we go. My watch list items for this week, I've got a couple of things that I'm watching. NVIDIA is always on my watch list. And it's got earnings coming up 5:25 in the afternoon. 6% implied move there. Keep an eye on NVIDIA. Same with Zoom. Zoom is always an interesting. I think that there's almost always a trade to be had in ZM in Zoom, and they do come out with earnings 5:23 in the morning before the bell opens. 9% implied move there, and then a lot of retailers here. So Costco is a retailer, Macy's is a retailer, JWN is Nordstrom. Dollar General is a retailer. Alibaba is the biggest retailer out of China, and all of these report this week. 5:26 in the afternoon after the bell closes, 5:26 in the morning, 5:24 in the afternoon, 5:26, 5:26. 2% move, 6% move, 6% move, 4% move, 3% move are all implied and built into the price of the options chains in these right now. I would keep an eye on all of these. I think that retailers, in specific retailers, have really been beaten up these last weeks and a half or so of earnings. And it will be interesting to see if that trend continues. And if it does, there might be a overriding trend that you can play on all of these. So keep an eye on those as the trading week develops. A couple other things to think about on Monday. We do have Fed Bostic is speaking in the morning. It's really the only major news item right now that's on the agenda that could potentially move the market. Core trading ideas for Monday. Obviously, we'll be doing our zero DTE. That's the focus for the day. We will be reinitiating our IWM weekly credit strangle trade. That thing has just been money. It's just been an awesome, awesome trade. We'll redo our 4 data expiration SPY trade, which we pulled off early last week. Had a nice profit on that. And then we'll keep working on our Q4 DTE trade, which we have rolled from last week. We've rolled it out now twice, and we rolled it out to Wednesday's expiration. We only have the puts on right now, so we'd like to get the call leg working on that, and it looks really good right now. It's rolled into a profit zone right now, but we do need to get that call leg put on. So that's going to kind of be our core strategy for Monday. Potential bonus trade, we are looking at another one-day overnight trade on the index. Probably going to switch these to maybe a little bit of a butterfly type trade going forward. You know, it's interesting the dynamics and how they change in the marketplace. Last year, we had a little bit of a challenge with our zero DTEs in getting a good risk-reward ratio because the premium was, in some cases, a third what we're getting right now today. Our 4 DTE trades worked awesome. This year, it's a little bit of a different situation in that again, we're getting 3 times as much money on our zero DTEs. They're fantastic, but it's been a little tougher with the 4 DTEs because you're a week out on these trades, and who knows what the market's going to do in a week. So trades come and go. They ebb and flow. Last year, as you guys know that have been part of the live trading group forever, we took my son's account and we ran it up from about $3,500 to about $13,500. Primarily, a lot of different trades in there, but primarily on 1 DTE overnight NDX index trades, NASDAQ. And they work like clockwork, and they were crazy good. He was bringing in $400, $500 a day on those. It's not that easy anymore. This index is a lot more schizophrenic and a lot more difficult to put a overnight trade on, I believe. We're not going to abandon those, but we're going to do them in a little bit different way so that we can put a little bit better risk-reward ratio on up front. And if they don't work overnight, we can fix them pretty easily the next day. So that's our ideas for Monday's trading session. Tuesday, we do have home sales out a half hour before the cash open. Powell will be speaking 2 hours and 40 minutes after the open. So you got to have that on your timer. Make sure that you're aware that he will be speaking on Tuesday. On Tuesday, we will be doing another zero DTE with the butterfly. So we start with the butterfly. If it works, that's fantastic. If it doesn't, we do an overlay on top of that trade to try to bring it back around into profit zone. We will also be doing on Tuesday a bonus trade that's sometimes referred to as a zebra, but it is really just a synthetic long position on one of the indices, and we're probably going to use the ETFs. So I'm imagining it's probably going to be on the SPY But that will be, look forward to that. That's going to be a fun trade. And if you haven't watched the video on the YouTube channel already on what a zebra is, check it out. I think you're going to like this trade on Tuesday. Obviously, we'll be scalping all day in the scalping room on Tuesday. And then we will look to do a 1 DTE overnight index trade once again on Tuesday. Wednesday, we do have crude oil inventory numbers coming out. We got an oil trade working in our account right now. Hopefully, we'll be able to take that off at a nice profit on Wednesday morning prior to this report coming out. Once the oil inventory numbers come out, we can reapply a new oil trade. Durable good orders out an hour prior to the cash open, and then FOMC minutes coming out once again, 2 hours to the close. No news conference from Powell, but we will have the FOMC minute release. So Friday is going to be a busy day. We usually try to double dip our 0 DTEs on Friday. That will be sort of a critical day for us. We try to get one in going, up and running right away early in the morning, and then we take it off before the minutes are released. And then if there's trading action after that, we will try to reapply it. And obviously, we're going to look to reapply our current oil trade as well as a 1 DTE overnight index trade. So that's on the agenda for Wednesday. Thursday, we've got jobless claims coming out an hour before the market opens up. GDP quarter over quarter estimate coming out an hour before the cash open. And then all of the trades that we love so much, the commodity softs and our nat gas. You got corn, wheat, soybeans, sales numbers all coming out in the morning. You got nat gas numbers coming out in the morning. We have a position right now. We closed out our trade with our wheat trade last week, fully profitable. We do have a rolled trade that we are in right now on the soybeans. We need to get the other side of that trade in. We need to get a put side in on that to really boost the return potential of that. And so Thursday may be a very good time to look at doing that. Obviously, we do have a nat gas trade going on right now as well. That trade looks amazing. There's not a whole lot to say about that. It's probably going to be our home run trade of the year so far. Knock on wood. Trading ideas for Thursday, again, a 0 DTE. We'll be starting with the butterfly, a little bit lower maintenance approach to 0 DTE trading. And then our bonus trade for Thursday, we're going to look at doing a trade on Twitter. And again, I put up a separate video on the YouTube channel on this trade. I call it a go or no-go trade. This merger with Elon Musk that he's working on with Twitter. It's either going to work or it isn't, right? He's either going to back out of it or he's going to follow through on it. But when I put the video together tonight, Twitter was around $38 a share. That's about a 40% distance away from where the deal is supposed to close, which is about $54 a share. So pretty big difference there. And either the merger works or it doesn't. We got a trade idea that I think is going to cover both of those bases. If the merger, if the takeover works, that's fine. If it doesn't, that's fine too. So look forward to that on Thursday. Of course, Thursday is a scalping day. We'll be in the scalping room doing that live all day long. And then again, we're going to look at a bonus trade of a overnight 1 DTE trade, probably again with a butterfly or something along those lines. Okay. Friday, we've got U.S. consumer spending coming out an hour before the cash open. We've got the Michigan Sentiment Index coming out a half hour after the market opens up. Friday, really, we're just going to try to focus on the 0 DTE index. We're usually worn out after the week of trading that we have had, so no bonus trades for Friday. But it will be a busy week one way or the other. So that's kind of what we're looking at for the week. Some updated performance results for you from last week. We're starting to really bump up the number of 0 DTEs now because we have more trading days to do that with. But we've had 61 days of opportunities to trade this. We've done 102 total trades. 99 have been winners. 3 have been losers. Also, remember, if you are a member of our live trading room, every one of these things is recorded from start to finish. The results, good, bad, or indifferent, how we adjusted them, where we picked them, how we chose the strike prices. There's over 3 hours of commentary every single day, every single solitary day on those trades. So make sure that you go, if you are in the trade only chat channel in our Discord server, you go to the very top. There's a pin at top. Click that pin. You'll be able to pull down a list of all of those videos to review anytime you want. Our 4 DTE trades, we did add another winner last week with our SPY trade. 76 wins, 7 losses. We still have that Q trade from last week though that's still open, being rolled. So we'll add. We won't add a new Q trade to this week. We'll just add a new SPY trade. Our IWM weekly strangles, 19 total opportunities this year. We've done 20. We double dipped on one week that we got 2 of those in. I don't know what to say, guys. All 20 of them have been winners. At some point, that streak has to end, right? It has to end. But my goodness, right now we make hay while the sun shines. It's been a nice trade. It's been one of the best trades we do consistently over and over, week after week. It's just been an awesome, awesome trade. Our pairs trades, we did add 3 new pairs trades last week, and we're still working those. We haven't booked a profit on any of those. So we've had 16 that we have closed out. All 16 of those have been winners. We still got the 3 that are up and running. Bear market trades, we did add a new bear market trade to our portfolio this week. It's on Merck, and that one might need a little adjustment on it. We've had a great success rate, 64 winners, 3 losers. But the Merck trade, little surprising that Friday, Merck was up most of the day while most everything else was down. Now, everything kind of came back at the end of the day. But Merck showing a little bit of strength that we don't want to see. So we'll have to keep an eye on that, but it looks okay right now. But again, that's one of the trades that we do need to take a close look at. They're fairly easy trades to adjust, but we haven't needed to do that yet. Our Tuesday, Thursday butterfly 0 DTs. I do break out the Tuesday and Thursday from our Monday, Wednesday, and Friday 0 DTE sessions because we do approach them differently. I would say that it's still obviously a 0 DTE because it's a day trade, right? They open and close the same day. But it is a different strategy, and it's a different approach than what we do on Monday, Wednesdays, and Fridays. And so I do want to give it its own category. We've had 6 opportunities, done 6 of those trades so far this year. That will obviously ramp up now to 2 a week. So that number should start to get higher. All 6 have been winners. Haven't had any losers yet. Last week's average return between the 2 days was 5.6%. Not bad. It was not bad. We had one butterfly that hit, one that didn't. So scalping results on Tuesdays and Thursdays. Tuesday, I lost $1,200. I just couldn't get on. Frustrating week last week for my scalping efforts on both days because there was enough volatility. You know, I try to trade one E-mini contract. It's about $5,000 margin requirement. And that's enough to be able to make $1,000, to make 20 points in the E-mini scalping in one day. So that's kind of your potential. My goal is to make $500 to $1,000 a day scalping. Well, the opportunity was much, much greater than that on both Tuesday and Thursday, and neither day could I capitalize on that. Just couldn't get on the right side of the market on Tuesday, down $1,200. Thursday, you know, it looks okay, but I was up $1,200 at one point and gave a lot of that back by the end of the day. So I'm not really thrilled or happy or proud of either one of those days, but that's kind of how scalping goes sometimes. And then our asymmetric trading system, I continue to be blown away by this program. I just continue to be blown away by it. We absolutely slaughtered the market last year and did it with less risk. This year is more impressive. It's more impressive. We're not making the out and outright returns that we made in 2021, but we are outstripping what the market is doing, which is just losing money, by 300%. 300%. So, you know, the end of 2022 is still obviously a long way away. There's still a lot of trading to go in this year. But I really do expect the very same result this year as we got last year with AST, beating the market return. And so far this year, We're tracking at 77% less risk in the AST program. It takes 5 minutes a day, passive investment portfolio. So these days where the market's just been swinging all around, I don't even look at my portfolio. I don't even look at it. So it's been great. We did add a category for dragonflies and double diagonals. We didn't get one in last week because I had to end up using my buying power for the oil trade on Wednesday that I forgot about. And we don't have one scheduled for this week, but we are rolling out some free educational material for you guys this week on the double diagonals because we are going to start putting some more focus on those. I love those trades. And in fact, here we go. The bonus gift for you all this week is the ultimate guide to double diagonals. So I will drop a link for you in the bonus training channel in the Discord room. Please check that out. It is pretty much everything you need to know about double diagonals, why I love them, why I think they're great trading vehicles, and as you can consume that information, you'll be a little bit more informed as we get started using them. Okay. All my contact information is here. I would love to hear from you guys. I'd love you guys to participate in our program, but most importantly, I'd like to hear from you. And there's a myriad of ways you can get a hold of me here. YouTube is always great. Twitter is fantastic. You can book a Zoom session with me on Calendly if you want to. You can email me, whatever makes you feel comfortable. But I always love hearing from traders. And I always like to leave these preview videos with just a little bit of gratitude for you guys. I appreciate the support that you guys give me in the work that I do. I hope that it is valuable for you guys. And again, I just appreciate y'all. If you are watching this video and you are not a member of our live trading room and you'd like to be, we've got a no risk guarantee. You can sign up for a week. It doesn't cost you a penny. You can check it out for free. If you do sign up, your first month, I will give you double your money back guarantee. Ironclad, double your money back guarantee. If you don't just think it was absolutely amazing. All you got to do is a couple little tiny requirements, which is be in the trading room, be focused on the trades that we do, show me your results, and have an accountability meeting with me to where we go over what you're doing and how you're doing it, and you know how you're setting yourself up, so to make sure that you're not off on a crazy tangent. But if you'll put the work in, there's no reason to not come check it out. So I appreciate you guys. Hope you have. I will drop a link here in the description box for a free trial access and a link for the video that talks about what you got to do to get the double your money back guarantee. Appreciate you guys. I will see you literally in about 12 hours in the live trading room. So take care. Have a good rest of your weekend.